So, hello everybody, good morning.
We'll be pretty close.
I'm Liz Beckman. I'm a partner in the Benefits and Compensation Group in the Seattle office of Dorsey and Whitney, and I'd like to thank you all for coming to the second annual Forum on Employer-Sponsored Benefits. We have a huge room full here of people, and we also are doing a webinar simultaneously. So thank you very much for coming. Just a couple of words of instruction. Number one, make sure that you sign up for your CLE and HR credits. There will be 2 signups, one for this session, and then a second one for all of the 3 sessions combined that follow. And number 2, as always, please turn off your cell phone ringer so that we aren't interrupted. We have a really full agenda today, and we're going to start off with, I think, a very interesting topic. I had to ask Tim Goodman yesterday, I said, what are you going to talk about? Because it seems like there's so much going on in the ACA sphere and a lot of stuff that we don't know. So I'm really interested to hear what Tim and Melinda have to say about ACA Repeal and Replace 2017 so far and looking ahead. So I'm going to turn it over to them for now. Thanks.
Thank you so much, Liz. So we're going to dive in here and talk a little bit about all the work that's being done by the Congress and the Trump administration looking at the Affordable Care Act and efforts to make changes to that. And how we're going to do it in a second is Melinda will kick it off by talking about the current law, and then I'll talk about some of the proposals, and then we'll look at their impacts. But we thought we'd start out with, why does this matter? Why is this such a big deal? I know everybody in HR knows why it matters. Every time they've completed a 1095C, they know why it matters. But a little bit of overview here. Obviously, one of the biggest aspects of the Affordable Care Act is it has really increased coverage of individuals in this country, especially so in the Medicaid space. And that's one of the things that we'll come back to as we work through things here. It's also expanded the depth of coverage, the sort of amount of coverage that people have in terms of the different benefits. But of course, all that expanded coverage comes with a cost. And that's one of the issues really that has concerned many Republicans, is the fact that there have been a number of new taxes and other costs that were related to this expansion of coverage. There's a whole range of taxes. We could go on and on about those. And there's also things to make the exchanges work, including both the subsidies and cost-sharing arrangements to make individuals be more able to afford insurance through the exchanges. One of the issues that's been out there that's been very significant is the cost of insurance. The cost of insurance has continued to go up. I guess the way I'd phrase it is the Affordable Care Act may not have made coverage more affordable entirely. It has expanded coverage for sure. It's not made it necessarily more affordable. And that's been an issue, though, in terms of things, because if you're a person who has a lower income between subsidies and other things, insurance has become much more affordable for you. But once you get above, say, 400% of the federal poverty line, insurance has probably not become any more affordable. In fact, it's probably gone up more quickly than anticipated. So both that's been affecting individuals, more middle-class individuals. It's also affected, I guess, as we note on the final point here, insurance companies really had a rocky time at the start trying to adapt to all this influx of people and figuring out what should be the pricing. I think that most insurance companies are have gotten a much better sense over the last 3 years of that. But this is the quick background of what the sort of issues are that we'll be covering here. And with that, I'll turn it over to you, Melinda, and we can go on to the current law.
Thanks, Tim. Hi, everyone. Melinda Maher. I'm a partner here at Dorsey in the benefits and compensation area. Tim did these slides, so thank you to Tim. He's great at this. So I want to give you just a little bit of an overview of what the ACA does right now, so we can kind of level set, like, okay, here's what the law is doing now, here's what maybe it will do in the future. So one of the things it did is it really imposed specific coverage requirements, and that was a pretty distinct departure from prior law. So prior to the ACA, federal law didn't really tell us what we had to cover. It did on the margins, but on the main it did not. And the ACA came in and said, you know, we've got specific requirements for what we want insurance to cover, in particular, essential health benefits. So those of you who are self-funded will know that that doesn't specifically apply to you, but it did apply to the insured plans. Prior to the ACA, the states would dictate what insured plans had to cover. Then the ACA came along and said, no, we need you guys to cover essential health benefits. The way it affected the self-funded plans, which most of our clients are, is we could not impose annual or lifetime caps on essential health benefits. So those things were going on. We also had coverage to age 26, an example of what they said we had to, what plans had to cover, and in particular, no pre-existing condition limitations. So those were the main things that the ACA did in terms of coverage. Pre-existing condition limitations, hugely popular to take those away, hugely expensive to the insurers. We got rid of high-risk pools in all states because basically now the carriers had to take these people, and that has created many problems, and you'll see the Republicans trying to deal with that issue. Coverage to age 26, hugely popular, looks like it'll probably stay. Essential health benefits, really difficult, really controversial when you listen to the Republicans talk about it, because I'll give you an example, maternity coverage. So that's something that the carriers are now told they must cover. And you know, there's probably people out there that feel like, look, I don't want maternity coverage. I don't want to pay for it. So that's something that's controversial now and that they're dealing with. So basically the ACA told us what we had to cover, essentially. The ACA also provided a different delivery mechanism for coverage. So that used to kind of vary by state in terms of if you were, say, high risk, where would you go to get your coverage? The ACA said, now everyone's going to get coverage through the carriers, and everyone can go to the exchanges and get it. And also, when you go to the exchange, if you make not enough money, we will give you subsidies to help you pay for that coverage. So that's another thing the ACA did that was a fundamental change from, you know, our prior standards of prior approaches and basically that was a state-by-state approach. So the states were given leave basically to set up their own exchanges, or the federal government would do it for them. Some states opted to do it, some states didn't. Minnesota did set up its own exchange. And again, that's where you could go if you needed a subsidy to get coverage. And Tim raised this, and I'll talk about it more in a minute, but Medicaid was expanded so that people up to a certain level, 138% of federal poverty, could get their coverage through Medicaid. Beyond that, you could go to the exchange, possibly up to 400% of federal poverty, you would qualify for a subsidy. The other way that the subsidies are designed is that they want to keep your premiums within a certain range of your income, 9.5%. You guys may remember that because as employers, we struggled with that. Like, how do we know exactly what our employees' family household income is? They gave us some workarounds for that, but that was the goal under the ACA was we want to keep your premium within a certain range of what you're bringing in. And then they provided cost-sharing subsidies under the ACA. So in addition to getting help with your premium, if you made not enough money, they would also give you help with, say, your out-of-pocket costs. And then finally, the ACA expanded Medicaid. We talked about this. This is huge. I mean, if you follow the news at all, you'll see that this is a big deal for the Republicans because it is essentially what one might call an entitlement program, which if you're on the right, you don't like that necessarily. It also costs money. It's expensive. So, and the other thing to keep in mind here, you'll hear this talked about a lot. So what the ACA did is it said, look, we're going to increase funding for Medicaid, and we're also going to basically fund it without, I don't know how to say it, without end. Like we're not gonna cap the funding. Whereas when the Republicans talk about it, they want to cap the funding, and in part, I think that's to incent states to do better when they provide their Medicaid coverage. I think there's probably a school of thought that says, look, if you don't keep an eye on Medicaid spending and you don't incent the states, if the federal government picks up the entire cost, there's no incentive for the states to do a great job of keeping control of their costs, and the costs are going to get out of control. So that's kind of the debate going on with Medicaid. So finally, under the ACA, we had to pay for this. We had to pay for all of this kind of additional help for people to get coverage via the subsidies. We had to pay for the carriers to get in the game and be in the game with these high-risk people. Basically, there were reinsurance pools established. We had to pay for the Medicaid expansion. So the way we did it is through taxes. They also did it through cutting Medicare spending. They cut some of the Medicare Advantage programs and other Medicare spending. So it was a combination of cutting Medicare spending, which did not make the providers happy, but also through taxes, which the rest of us probably don't like too much. But you'll see a list of the taxes that were imposed to help pay for some of this. I'll raise one of them, which is the Cadillac tax. So that actually was scheduled to go in, or scheduled originally 2018, was it?
Yeah.
Kept not popular. It's not popular. So as you may recall, this is the notion that if your coverage is too rich, you will pay an excise tax on amounts above a certain level. And the problem is employers didn't like it and the unions didn't like it. Labor doesn't like it because they have negotiated for very rich plans for their employee or their members. So it got pushed back. I think even under the Obama administration, we got a pushback. And it just continues. It has continued to be pushed back. And I think in the Republican proposal, they're continuing to push it back. Keep an eye on that. But that is a source of funding, so it's hard to get rid of it entirely. And there's some other taxes that you'll see. Finally, the other thing that most of you in the room and on our webinar are probably so familiar with was the reporting. Very, very detailed, one might say onerous reporting that we got as a result of the Affordable Care Act, in particular the 1094, 1095 reporting. So that all came about as a result of the ACA. And I think it's your turn, Tim.
Yes. So, obviously, we have a Republican Congress now, and they got to work in January, and there's been a number of proposals put forth. We're going to focus on the American Health Care Act, but this slide just talks about some of the statements that have been made by both the administration and some of the proposals before Congress. I have to draw everyone's attention to the second bill in the House, the World's Greatest Health Care Plan Act. Who would not want to have the world's greatest healthcare plan act? A quick trivia question. Somebody guess what state the representative is from that introduced that? You're not hearing me, so I'll tell you. Texas. Of course, it's bigger in Texas. You've got to have the world's greatest healthcare plan act if you're from Texas. So let's talk about the American Health Care Act. It's the provision that has now passed the House. And some of the provisions in it. And so there's a few slides that talk about this just to give you a sense of the legislation that actually has made its way through the House, and we'll talk a little bit about its path through the House. But first of all, the American Health Care Act does a number of things in terms of repealing the taxes that have been set up under the ACA. A number of the taxes are being repealed, and one of the things, and we'll talk more about this, is that the Medicare 0.9% tax, the repeal of that is actually delayed and pushed off till 2023. And some of these things, like the delay in the Cadillac tax, these are all due to budgetary issues and how it gets scored then by the Congressional Budget Office. With respect to the exchanges and subsidies, immediately there wouldn't be drastic changes, but coming in 2020, there would be a change to how those are run. And the idea would be right now under the Affordable Care Act, the ACA, the subsidies are really based on your income level, and this is complicated. When you go in to look at those subsidies, you don't know what you might be earning that year, and there's a lot of complications there. So one of the things the Republicans are proposing is, well, let's change that and base it on age instead. And as you can guess, that has winners and losers at different points in the time. So if you, for instance, would be, say, age 60 and have a very low income, even though you're getting a $4,000 tax credit in the Republican proposal, it might be that you're still a loser compared to if you're age 60 and you have a middle income, and then you might actually be a winner because before you didn't have a subsidy. Cost sharing subsidies, one thing that people weren't as familiar with, but it's been getting more press and publication, and we had a little brief note on this earlier slide. People who have incomes up to 250% of the federal poverty line, actually some of their co-pays and out-of-pocket costs were also being covered or paid for and being paid to the insurance companies. This has been a point of actually litigation. The House of Representatives have brought a lawsuit against the Obama administration. That's still ongoing. There's still negotiations about how to resolve that. But that would be repealed at the end of 2019. Reporting, the thing that all employers wish would just go away, no change. Now, part of that I think is because this is meant to be a bill that could go through Congress on the basis of reconciliation, so you wouldn't need to worry about a filibuster in the Senate, but no change there. Coverage requirements, the bill, the ACA would retain coverage to age 26. Originally retained the essential health benefit required. Now there's, because of negotiations, especially with some more conservative members of the Republican Party, there's a provision that would allow states to waive that requirement. And the waiver process is not like the waiver process under the ACA. The waiver process is pretty much this. The state raises its hand and calls the HHS and says, you know what, we'd like to waive essential health benefits. And the Secretary of HHS goes, sounds good to me, and they're waived. So it's a pretty straightforward process. One of the big things at the bottom here, almost all these proposals in the HCA is not an exemption from this, expand HSAs. They really look to ways to increase the amount of contributions to HSAs and hope to use that more in terms of healthcare going forward.
And can I just make a comment on it? So the essential health benefit issue, you know, that's, I hope I'm not stating the obvious, but that's basically the ability for carriers to provide less coverage. And so the idea is I can buy less, so it will cost less. And that's the way that the Republicans are trying to tackle high health insurance premiums, allowing carriers to provide less, so you, the consumer, any consumer can pay less. So, you know, you have to, that's just basically just a different fundamental approach between the Obama administration, the ACA, and the way the Republicans want to tackle things. So if that does go through, though, if they give states the ability to waive the essential health benefit requirement, you certainly could see carriers doing many more basically skinny plans. You guys may remember those from pre-ACA days, just very bare bones plans. Perhaps, and I haven't looked at this closely, I don't know if they could go back and reinstitute like some sort of maximums. And we'll talk about this again. It does have an impact on you guys, the employers, because remember, you are not entitled to provide lifetime or annual maximums on essential health benefits. And if these states go in and approve waivers, you could adopt a state that has approved a waiver, and you could probably put in lifetime or annual maximums on things that were formerly essential health benefits. But I'm getting ahead of ourselves. We can talk about that more.
That's true. I mean, basically what Melinda's saying is there's going to be a great deal of difference perhaps across the country on what different states would do depending on that type of waiver if it were enacted. Some of the other things then that are changes under the American Health Care Act include health flexible spending accounts, which sort of spring back to the way they were before the Affordable Care Act. You would no longer have the limits on them at $2,500 as adjusted, or the limits on prescription drug. Medicaid expansion. This is really where a big change would occur, and some of the more significant budget saving measures would occur, because basically the Republican proposal would cap and limit the amount of being used for the Medicaid expansion. It would really turn it into block grants to the states, as Melinda discussed a bit. Finally, this is in smaller font, but it's a pretty big point. Changes based on age in terms of market rating. You know, basically right now under the Affordable Care Act, one of the things is that older people, their cost of insurance is generally capped at 3 times the youngest person. Already they're looking at expanding it to 5 to 1 and also adding waivers to that. Well, one of the things that we'll get to in a second here that causes then is that as you get older, your cost of insurance premiums is going to be higher. So even though the Republicans are stepping up the amount of the subsidies, that step up might not be even sufficient to keep up with the cost of increasing premiums for people who are older based on the expansion, sort of this rating approach. The bill also proposes a surcharge if an individual has a break of more than 63 days in coverage in 12 months. And that's meant to keep people in the market so they're not hopping in and out. And for some employers who are using the Part D drug subsidy, there's a repeal there, and that would be taking effect. So there have been a lot of changes to this bill. And something I want to emphasize now, you'll hear me maybe repeat it, healthcare is just an extremely difficult issue, as everybody in this room knows, and it was very difficult for the Democrats with the Affordable Care Act, and it's now very difficult for the Republicans as they tried to get legislation through. just to put everybody back in the mindset again, it took the Democrats 14 months to pass the Affordable Care Act. They passed it at the last possible moment before they lost their 60-vote majority in the Senate. And it took a ton of negotiation work to get that massive piece of legislation done. The Republicans are trying to do, in my mind, an even more Herculean task because they came in March and they were trying by the end of March to pass a bill to reform that. Now, true, it's not the entire, what we're looking at here are the things that matter to all of us in this room. The ACA, actually, this is maybe affecting 10 or 15% of the ACA. There's tons of other provisions of the ACA, from Indian health services to other coverage issues. But even so, to try and move it through that quickly, even though they've had years to think about it, was a pretty Herculean effort. So as you hear us talk here, I wanted to say, any change is difficult, and the whole issue of healthcare itself is a very loaded topic. There are a lot of very sensitive issues there for different individuals. So basically, first of all, it was introduced in March early. There was an effort to try and move it quickly, and then one of the things that happened was this first CBO score came out, and that caused a lot of concerns, especially about some of the practices for individuals who would be older and the costs that they might be incurring. I think there was an example in the first CBO scoring of an individual who was 60 who might see like a $15,000 increase in the amount they had to pay if they were buying health insurance. There were some changes, though, that occurred in March, and there was an effort to get a vote on March 24th. The Republicans were not going to win that vote, so the bill was pulled at that point in time. There were no ongoing discussions. So at first, everybody took a breath, I think a step back, and then in early April, there were some more discussions. And first there was, and I love some of these terms, the invisible risk-sharing amendment, or pool. I love invisibility in terms of health care. I mean, we already have invisible pricing perhaps, so maybe an invisible risk-sharing pool is just a complement to that. That was a first step to try and say, okay, how can we address the concern about these high-risk individuals? Then Representative MacArthur came up with a series of amendments. Those were proposed on April 23rd, and that was an effort to try and both get some moderate Republicans on board, but also make some changes that more conservative Republicans would agree to. That brought a lot of conservative Republicans on board, but still not enough. So in early May, there was yet another amendment. This was the Upton Amendment. This was to add more money for people who had pre-existing conditions or might have some gaps. And with that, on May 4th, the Republicans were able to pass the American Health Care Act 217 to 213. So just a small margin, but it made it out of the House. And so now I'm going to turn over to Melinda, and I've got one more thing about CBO scoring, and then we'll talk about the Senate. One of the interesting things here, as these changes have gone on, and the Democrats experienced the same thing, I think there was a fair amount of political hay made of the fact that there were special deals cut to finally get over that threshold. Well, there's also special deals being cut now. And as you can see, originally as proposed, there was going to be a federal deficit reduction of about $336 billion. That's gone down. It's now down to $119 billion, and that's going down because there's money being allocated to different things to try and do transitions and to try and help people. But that means one of the Republican goals here is if we cut the spending enough, I think that also then plays into the tax reform that's trying to be implemented. And as you see, though, one of the difficult issues here is the number of people who are being covered, and this has continued to be an issue, is going to be less. If you're spending less on coverage supports, especially through Medicaid, you're going to see fewer people covered, and that has some implications. The most recent bill, and I won't go through all the numbers on this slide here, we're on slide 13, but it still shows that by 2026, there'd be 23 million fewer people covered than there would be under the Affordable Care Act. So, Melinda?
Oh, sorry.
Nope.
So they got the bill out of the House, squeaked by, and now they sent it over to the Senate. If you remember from your 6th grade civics class, that's what happens. And now it's at the Senate, and who knows? I mean, so the Senate made a lot of noise about how they didn't really like the bill, like don't expect it to look the same. And so they appointed a working group of 13 senators to work on it. And apparently they just put out their proposal. My understanding is they gave a PowerPoint presentation to the senators, the working group did, to say, here's what we've got. And immediately there was some negative reaction to apparently the fact that they have retained kind of that community rating idea so that they won't let they're not letting carriers have a lot of flexibility in terms of premium setting. Also pre-existing conditions. I think there was some reaction to what they were doing with respect to pre-existing conditions, which was kind of retaining the prohibition on not covering pre-existing conditions. It's continues to be very controversial in the Senate. I think part of the problem is fundamental for some Republicans, and one is Rand Paul. If you're somebody who doesn't think government should be in the business of healthcare, which is essentially what he believes, it's hard to get behind anything here. And so apparently most recently, Senator McConnell said, well, Senator Paul is out. We've lost him. So that brings them down. They have 52 votes if they get everybody behind something. And apparently they think Senator Paul won't get behind anything. So they're down to 51, although Senator Paul's office said, nobody speaks for us but us. So we'll see. So there's a real tension here, too, because some of the senators, Republican senators, are in states where the governors agreed to expand Medicaid under the ACA. And it's been, I think, largely perceived as a win in terms of coverage. Really covered, and I think Ohio is an example, 25% of the people in Ohio get their coverage via Medicaid now. So to take that away is very difficult. So you'll see a senator like Rob Portman saying, I'm not in favor of that. And you've seen their governor saying, look, we got to retain this Medicaid expansion. So there's real tension there in the Republicans themselves between, somebody like Senator Paul who says, let's get out of this altogether, and those that have seen a real benefit to their states and are unwilling to give it up. So they have to kind of try to meet in the middle there, and it's going to be difficult. I have absolutely no prediction on that. I don't know, Tim, do you? What the Senate's going to do?
I'll make a prediction at the end. We'll keep everybody in suspense until then. How's that? We have one slide here to try and just give you a sense of some of the different proposals and to give you a sense of the different views. And there's a disclaimer in the upper left-hand corner. It's a vast simplification of proposed legislation. If you look across the rows here, we're on slide 15. The first topic is coverage mandate, retaining age coverage of dependents through age 26. Everybody agrees that's a good idea. I joke that if the Affordable Care Act had promised everyone a kitten or a puppy, that would also be retained, and we'd have a lot more animal adoption going on. But almost everything else, if you look, and this again is a bit of a simplification, but you'll see that different bills would either retain or repeal, and there's just a great deal of difference amongst the thought process, and these are all Republican bills. And so one of the interesting things to me is if you go way down, especially on some of the taxes, you'll see that some of the Republicans would actually retain a number of the taxes. And that is because of the revenue that they raise to pay, again, for things like the Medicaid expansion. So I guess there's a lot of work that the Senate will be doing to try and figure things out. Melinda has already talked about this some, but on slide 16, we're talking a little bit about, if you just think about the composition, so, you've got in the House, which has passed the AHCA, about 35 members of the Republicans are more conservative. They're members of the Freedom Caucus. About 30-odd members are members of the Tuesday group, it's called, and that's a more moderate group of Republicans. And so it's very hard to find legislation in the middle that can get through there. But it's even harder in the Senate. Again, we've got 52 Republicans. And I will also not speak for Senator Paul, but I will say that there's a bit of difficulty here. A number of current Republican senators are conservative, and they ran about fully repealing the Affordable Care Act, and they may think to themselves, is it better to vote for something which sort of nibbles at the edges and that might then upset my base or cause people who are more to the right to run against me? Or would it be better not to vote for it and say, you need to get me back in there so or even maybe put me in a higher office so that I can take a better stab at trying to change this legislation? So there's two ways that legislation obviously can get through the Congress. One of them is reconciliation in the Senate, where you only need 50 votes, as Melinda was mentioning. And so if you lose 3 Republican senators, you don't have that 50 votes. That's a very tight number then for the Republicans to try and figure out what can we craft in terms of legislation that'll work. to pass, and this is just on the tax aspects. Again, this is why probably things like reporting or other things aren't being addressed quite yet, because they're trying to do some work through the reconciliation process. The next slide is for the next time you're at a cocktail party and you want to talk about budget reconciliation. I know that comes up. You can be the star of the party and say, I know the Byrd Rule. I won't even get into this in too much depth, but basically, really, the Byrd Rule is meant to say, well, what can you go ahead and pass on a reconciliation basis? And if you look through this, it's very limited. But on the other hand, it's going to be someone from the Republican Party who at the end of the day decides what is tax reconciliation. I don't think they would stretch things too far, but there'd be some ability to stretch things perhaps and say that it can be covered through reconciliation.
And I just want to make sure people understand. So what's happening is that bill in the House is going to the Senate, and they're trying to get it through reconciliation, which only needs 50 votes as opposed to 60. The 60 normal votes you would need to break a filibuster to pass normal legislation. So there's constraints on what they can do. But remember that they're going to do whatever they do, if they do get something out of the Senate, it has to go back to the House then.
Yes.
So it is important to remember the House is still in this, and they're going to have to vote again too, unless the Senate passed exactly what the House passed, which it won't.
Yeah. Every time I go through this, I feel like I'm glad I watched Schoolhouse Rock.
I know.
I'm just a bill. I'm just a bill. I'm sitting on Capitol Hill. So anyways.
That's enough singing.
Yes, I thought I would stop there, Melinda. I was already stopping. If on the evaluations, you can say everything fine except for Tim singing. So one of the other things facing the Congress really is the timeline here in trying to think through things, which is there's a limited amount of time this year to get things done, and there are many other things that are going on, including some different investigations and things that are occurring, and that distracts, obviously, from trying to get legislation passed. Already, we've got some weeks where the House and Senate have different work weeks, and you'll see that really the whole month of August is basically gone. Nobody's going to be in Congress then. Even in September, people are going to be out. And so as things go along, we're sort of burning through time here. So that's not working to help get the legislation passed. In addition to legislation, a little bit of transition here, I'm going to turn over to Melinda. You know, there's really different ways that the administration, Congress are looking at this. So the first is really looking at legislation. How can we change some of the fundamentals? The second is, well, let's take a look at the regulatory process and let's see what sort of orders and regulations we might be able to change. And we're going to talk briefly about that because that's another tack that is being used to look at the Affordable Care Act.
Right, and so what happened was basically when President Trump got into office, one of the first things he did is issue a variety of executive orders, including one that we have quoted here, 13765 executive order that basically said, you know, do anything you can, agencies under my control, to minimize the burden of the ACA on states and on individuals. And there was a lot of question as to what this would mean. As far as I can tell, what it is meant is essentially like when you file your taxes, if you don't say anything in response to the question as to whether you had coverage, it won't immediately reject that. It will accept your taxes. And I'm not sure you will even get an inquiry as to that. So other than that, I actually haven't seen a tremendous amount of fallout from this particular executive order. I guess, Tim, you have not. And in part that's because we actually have rules, and you'll see that last bullet kind of alludes to that. But you know, you can't undo by executive order what a previous administration has done by rulemaking. So the government does work in particular ways. We also had this executive order. Tim, in particular, just is fascinated by it.
Yes.
And it is the one that said, look, for every new regulation issued, you have to get rid of 2 prior regulations or identify them for elimination, which just sounds wonderful, doesn't it? But I don't know that this is actually, have we seen any? No. But we're waiting on that, so.
Yeah, the funny thing about this to me is it's actually, in a way, right now, I don't know how this works, I guess. It sounds great as a publicity piece, but right now, as Melinda's about to talk about, the Trump administration is looking at revising a regulation. And I guess that would then not count as a new regulation, so they don't have to repeal to it, but it would be very difficult then, if you are trying to do something new that you want to get done, do you have to go back and repeal two before you can get your new thing done? I don't know, but that's one of the interesting things about that.
Yeah, that is a good question, Tim. And in fact, they do have proposed regulations they put out that were actually finalized on April 13th for market stabilization purposes. This was really with respect to trying to get the carriers feeling better about the exchanges. So I think we've all seen in the news the carriers are very, they basically are they pull out of the exchanges. One could question why, but certainly the message the carriers have given to the general public and to the administration is it's because we can't make money and that the risk is too high for us. The risk pool is bad. So one of the things that the Trump administration did, or that CMS did, was put out new regulations with respect to that. My sense on these regulations is actually some of these were in the works prior to the transition to the new administration. One of the things they did was shorten the open enrollment period into the exchange. So now it will end, it will go from November 1st of 2017 to December 15th of 2017. You may recall the two prior years, it actually carried into January of the following year, so it was a much longer open enrollment period, and the carriers didn't like that. They wanted a shorter open enrollment period. The other thing these regulations did was made special enrollment periods harder for people because the carriers felt like people were gaming special enrollments to come and go from the exchanges, so these regulations attempt to tighten that up. They also help the carriers, they make it harder. There was a rule under the prior rules, you could avail yourself of a grace period to pay your premiums in the exchanges, that the carriers felt that individuals were gaming a little bit, so they've tightened that up too. So these regulations really have an impact on the exchanges. From your perspective, I think that open enrollment period is probably the one to keep in mind, because I think you may see people come and go from your plans into the exchange or vice versa. So that's those dates are important to keep in mind, those changes. So finally, we do have most recently proposed regulations, or I'm not even sure if they're proposed. It's a draft, yeah. To say we want to make it easier for employers not to cover contraceptive coverage. And you may remember that the contraception coverage is very controversial under the ACA, but that originally the ACA said you must cover contraception as part of preventive care. There was some exemptions for religious employers. That went all the way to the Supreme Court, the Hobby Lobby case, and private employers won some victories on that and were able to get exemptions from covering preventive or from covering contraception. Additional litigation ensued. And now the Trump administration has gotten into office and again is saying we're going to make it even easier to basically not cover contraception. And that's kind of, obviously controversial. You can see some statistics on that make it, there's certainly people who feel like that's difficult, in particular for women. And I think that's still in draft form, so not final at this point.
Mm-hmm. So we've told you how difficult it is going to be to pass legislation, and now we're going to tell you why we still think something might happen, and that's why this will not go away. So the next few slides here, we're on slide 23, talk a little bit about just the impact that healthcare has really on the budget and in some ways on the economy, but really on the budget. So the first thing is, you hear about the Cadillac tax, and in some ways you can think about that as like the limit on 401k contributions in my mind. It's an idea of how do you somehow start to curb the fact that this exclusion for employer-provided health coverage is such a big dollar amount to the federal budget. This slide has lots of numbers, but the one that's interesting to me is if you look at sort of the right-hand side, the amount excluded from the federal budget in terms of allowing employers to provide health insurance, not instead of including that in income for people, is doubling every 10 years. It's gone from 25 billion in '84 to almost 200 billion in 2014. That's meaning that the federal government has a smaller and smaller and smaller pool that it could draw from. And one of the ideas, of course, of tax reform is let's try and broaden the base of income that we have coming into the federal government so we could drop tax rates. Well, this is why the Cadillac tax was put in place. This is why, and right up until it was actually introduced, the American Health Care Act actually, although it was limiting the Cadillac tax, had a proposal to cap employer paid health insurance as well. And that's a concept that's not going to go away in Washington, I think, just because of these numbers. Right now, and this is in the lower left-hand side, basically the exclusion for employer-provided health insurance far outstrips almost every other exclusion. It outstrips the exclusion for retirement contributions, for the mortgage deduction, for other things. So if you're thinking of revamping the tax code, this ends up being a really big deal. And as the cost of health insurance rises, and the cost that employers are paying to help provide coverage to their employees rises, you can guess this exclusion rises. So that's a big deal, and one of the reasons that this is not going to go away.
And can I just say
Oh,
something
please.
about, because I think, and I want you to correct me if I'm wrong, but you don't see at this point the Republican proposals really tackling this. I think it's because they're deferring that till they get a tax bill. They will tackle it under their tax reform as opposed to in the healthcare bills. That's my sense anyway. Is that your sense as well? Okay.
Medicare and its impact on the budget. One of the things that I'll just point out here briefly that's interesting, if you look at the middle of this slide, right before the ACA was passed in 2009, the Medicare Trust Fund was expected to go insolvent or not have enough money in it to pay the bills in this year, 2017. The ACA added a number of new taxes, the 0.9% tax, the 3.8% tax on net income. And those taxes in part, and also people's decisions to work longer and other things, drastically increased the date at which the Medicare Trust Fund was expected to go insolvent. Earlier, I noted that the AHCA delayed the repeal of the 0.9% Medicare tax. In part, it's for this. I can guess right now how many representatives and senators will want to run in either 2018 or 2020 if the Medicare tax is repealed and the ads are saying Medicare is going insolvent because your representative, your senator has done this. Are you going to protect your parents? And you can guess the number that will run on that is about 0. But this is a big deal. If you start repealing those taxes, you have to think about, well, what are we going to do about Medicare funding? So that's another big aspect of the Affordable Care Act that has to be considered in how it's structured. The Medicaid program for low-income individuals. Here, there's some numbers on the slide here about how much money is actually going in terms of the cost of the expansion. When you look at again, totally interesting bedtime reading, go ahead and Google the Congressional Budget Office scoring for the AHCA. And if you go back into this and you look at some of these things, you'll see there are just enormous amounts of money that, again, if Medicaid is restructured, then that might be able to be used for tax reform, but it has an impact. And here you see, this is the sort of money, as more states adopted the Medicaid expansion, the cost of the federal government is going up. But at the same time, and Melinda pointed this out, states where the expansion covers more than 500,000 people, they include states where we, again, have Republican senators, such as Ohio. So that's going to be a tension as they work on legislation, but it's also a reason that it's an important issue for Congress that it'll keep looking at this. Finally, for all employers in this room and on the webinar here, we have a workforce that is aging, and that has a number of issues. If Medicare becomes more uncertain because we get rid of taxes, you can guess that your older employees are going to want to work longer because they're not certain what's going to happen with their health coverage. You can guess already that this is happening by just these statistics about what's the average age of the worker and how many people who are older than 65 are continuing in the workforce. The more uncertainty there is about health coverage, you can guess that workforce aging will continue and maybe even accelerate. And there's some studies that show that after a worker is getting older than 55, the medical costs obviously start to ratchet up quicker and quicker on those workers. So one of the things, I'm not saying I have the perfect answer or any solution here, but with the Affordable Care Act, if there was a guarantee of coverage, you actually saw some individuals who were willing to be entrepreneurs or maybe retire earlier because they thought, okay, I can get coverage elsewhere. these changes have the risk of driving that in the opposite direction again and causing people to be more fixed to their employers and less likely to switch jobs. So these are some of the reasons this is just not going to go away. We're going to talk a little bit now, Melinda, is about the impact of, the potential impact at least from the Affordable Health Care Act on employers. So.
Yes, okay. So this is a tough one because it's hard to know what change will look like. But if change kind of goes through the way we see it now, certainly HSAs will have a much bigger role because the Republicans really like the HSAs. And so certainly limits appear maybe to be going up, more ability for people to make catch-up contributions. So there's more flexibility for HSAs and more emphasis on HSAs as a solution to the problem. So as employers, I mean, we definitely have seen a trend towards HSAs, and we believe that that trend will continue if things change as they look like they may right now. The essential health benefits, I alluded to this before, but if things go as they appear to be going right now, and there's an ability for states to waive essential health benefit requirements, it would give employers more flexibility to say, we might put caps in where we had removed caps before. So to cap particular benefits that you couldn't cap before because they were in fact essential health benefits. So you would have the ability to do that, query whether employers will want to do that, but certainly I guess that may be something you would look at. The pre-existing condition exclusions, so basically what the Republicans are proposing is that if you have a gap in coverage, the insurance of 63 days or more, which may sound familiar to some of you because remember that was true under HIPAA in the old days. If you have that gap, the insurance company can charge you 30% more in terms of premiums for that first year of coverage. So that's their way. Rather than having an individual mandate the way we would under the ACA, they would say, look, you don't have to get coverage, but if you go to get it, you're going to potentially pay up to 30% more for premiums in that first year of coverage. So if you have a gap in coverage of 63 days or more. So what that says to me is, okay, I don't want to go back to the certificates of creditable coverage, but it does sound like that, right? Like you're going to have a way for your employees to prove that they had coverage through you. Perhaps we can leverage the existing reporting of the 1094, 1095, but the problem is that's retroactive reporting, right? Like we report on a prior year, and someone may need something, right now. So unfortunately, if that goes through, I do envision that you guys are going to have some obligations with respect to reporting on your employees to help them go get coverage without paying more. The potential for eliminating, now certainly, it would be nice to get an elimination of the employer shared responsibility fee, which is currently in the proposals, the Republican proposals, would give you the ability to say, look, I'm not going to cover everyone I'm covering now. What we have heard, particularly from big employers, is, we probably wouldn't fundamentally change things. My recollection, and you may recall, the standard is 30 hours a week. That actually wasn't a tremendous change for most of my clients. They might have been at 35 and they dropped to 30, but most of my clients were right around there, so that wasn't a big deal. I don't necessarily seeing that type of eligibility change. I think what would be nice is, the whole analysis of hours, the look-back measurement periods, quite onerous. It would be nice to get rid of those, and currently, it looks like, we might be able to get rid of those. But finally, I think, and Tim, this is Tim's point, and I think it's a good one, it is almost too late right now, unless we got something very quickly, to necessarily effectuate change for 2018. So, what we've been telling clients, I think, essentially is you probably stay the course for 2018, unless you're nimble enough to be able to make changes quite late. It's unlikely we're going to get a definitive answer as to what things are going to look like. And even if we do, I'm not sure they're going to necessarily be effective in 2018.
Yeah.
So what kind of impact would it have, these Republican proposals, on costs? Well, the taxes would be eliminated, and you would perhaps have less concern. I mean, there is a tremendous amount of concern if you're a big employer to missing people, because as you recall, if you miss more than 5% of your full-time employees, you're looking at a tremendously big penalty, essentially. So that concern goes away, and that's very helpful, I think. What will it do for premiums? Well, it's really hard to predict. I think, and the points Tim makes on the slide, I think, are good. You know, if you're insured, you're going to see maybe more flexibility in terms of premiums, because if you're in a state where the state has granted a waiver, I think you can probably, your coverage will not have to cover essential health benefits, and you will potentially see more flexibility about what your premiums will look like. But really, I think in the long term, it's hard to predict, and that's in part because of uncompensated care. And Tim's going to talk a little bit more about providers, but the providers, you know, the providers like the ACA because they have really diminished their uncompensated care because of the Medicaid expansion and because of the ability of people to go to the exchanges and get coverage. We're seeing that potentially could get rolled back. And so that will shift potentially. There will be more uncompensated care. As you probably know, that's just a hidden cost in the healthcare system that ultimately gets shifted to other payers, payers being you, basically the employers. Oh, and finally, and I think this is a really good point, you do, and we alluded to this, but the older workers appear to be, or older individuals, pre-65, maybe post-55, I think on the main, when you look at the literature, they appear to lose under these proposals. So what I think that means for you is, to the extent you have those workers, they're not going to want to leave because they've got no place to go in terms of coverage. That was one thing the ACA did, was it gave those workers an ability to leave and go get coverage through the exchange, and it was affordable. What we're seeing, I think, is the potential that that's going to go away. So your workforce, I think, will be impacted because those people will stay with you when they might have otherwise left. Finally, the Health Plan Administration, unfortunately right now, we're not seeing any proposed changes to disclosures or reporting, claims administration, and then I think, you know, this COBRA becomes a bigger deal under these proposals because when people leave, they're going to need COBRA more than they would otherwise. My previous hope was COBRA was going to go away because we had the exchanges. COBRA starts to look much more important now. And the fact that you can use, apparently, the tax credit for your COBRA coverage does increase administration now for employers and COBRA, unfortunately, for that. And finally, the exchanges. I mean, the exchanges are just, again, the impact, I think, for employers is the exchanges were there so that when your people left, you know, they had someplace to go to get coverage. As we know, COBRA is not always attractive because it's expensive. And it's hard to tell what those exchanges will look like. And you know, the statement about the cost sharing is important too. We don't know what's going on with cost sharing. The carriers have basically said, look, if the federal government isn't going to fund the cost sharing, we're getting out because it's not going to be cost effective for us to be on the exchanges providing coverage. So again, you know, exchange is important for you because if they fail, your coverage becomes that much more important to individuals, to your employees.
Mm-hmm. So I'm going to briefly talk about something that doesn't come up as much, and Melinda mentioned it briefly, which is we're seeing a lot of discussion here with the proposals about how this is going to impact employers, how this might impact individuals, but one of the real questions is what is the impact of some of this legislation perhaps on the whole healthcare system writ large? And just to take a few minutes on that, you know, if you think about the fact that by 2026 there might be 24 million fewer individuals who are insured in stuff, it could be a really big impact. You can imagine before the Affordable Care Act, I mean, there were a lot of stories even in the press back then about how healthcare systems were adopting collection agencies to help them get things paid. And even then, the trend towards high deductible health plans was leading towards more individuals getting healthcare and then not being able to pay for the healthcare. More charity care and things were going on. The expansion in coverage has meant that the healthcare system, at least from a provider perspective, has worked more efficiently and has been able to guarantee, okay, these people at least have coverage so that when they come in, we can get our bills paid and we can take care of this. If those individuals then are now uncovered and no longer those bills are being paid, if those people are using the emergency room more often, if they're getting charity care more often, as Melinda said, that then means those systems have to say, well, who can we charge more to? Who do we have to raise the rates on? Well, all those systems, when they negotiate with insurers, are going to say, well, we got to raise the rates this year because our costs are going up because these people don't have coverage. So it's sort of like you're squeezing one part of the balloon and the other part then is being expanded out. And that's just one of the issues I think that makes, again, anyone's attempt to deal with healthcare reform or healthcare legislation very complicated. We've done this presentation before, and one of the conversations that comes up is, well, none of this legislation is really addressing the core issue, which is rising healthcare costs. And they're right. This is really all about, is the federal government going to play a bigger or smaller role in what is mandated for coverage? Is the federal government going to play a bigger or smaller role in terms of helping people pay for healthcare coverage? None of it gets to issues about, well, how do we really try and start controlling healthcare costs or getting people to better use healthcare dollars? And that's probably an even more difficult discussion than some of these other things in terms of what the federal government might spend or what the federal government might mandate. And unfortunately, that would be the really helpful discussion to have in the healthcare space. But that's something, especially in terms of the healthcare providers, that has to be thought about. One of the interesting things to me was right out of the gate, what were the first organizations that were concerned about the AHCA? It was the American Medical Association, the American Hospital Association. Another organization that was concerned, AARP. They also sent a letter to the House. Why? Again, if you think about some of these changes, especially for older individuals, their premiums could be going drastically up. If you change that age rating, if you go ahead and get rid of subsidies for lower income individuals, that can have a huge impact. And if you look, some newspapers have now and then published these beautiful graphics that would be too hard to display or put on here. But there's winners and losers depending on your income level, depending on your state, and whether or not it's adopted Medicaid expansion. So all this is a very fluid and moving situation. But for all the reasons we've talked about, this is where I go out on the limb and I make the prediction, because I wouldn't invest the dollar for the Powerball on this, but at least we'll talk about it. There's a couple of approaches here. One is trying to go big and say, okay, let's try and do everything like the AHCA, where we repeal a whole host of taxes, we restructure Medicaid, we do a whole host of things. If that can't be done, that doesn't mean nothing can be done. That still would, I think, there'd be an impetus in Congress to at least be able to say, we've taken some initial steps here. We were elected on a platform of repeal and replace, and so here's the first down payment on legislation. What might that look like? Well, one of the things it might look like is some small scaling back in the Medicaid expansion, or at least how much the federal government supports. Under the Medicaid expansion, the government was supporting 90%, maybe that would shift down to 80%. It still could be the same thing, but that would free up some money. It would allow the Republicans maybe to repeal the individual mandate. The CBO scores here on the individual mandate over the next 10 years is expected to raise $38 billion. The employer shared responsibility fee, $171 billion. If you got rid of those two things and you did a slight scale back on the Medicaid expansion, you could at least say, hey, we've started to change the Affordable Care Act and we're trying to do things to make this better. Individuals, you no longer run the risk of having to pay a penalty or a tax just because you don't have coverage. Now that, again, even that issue has some repercussions on whether or not people are going to buy coverage, but it would at least enable the Republicans to say, we did something, we didn't just stop here. But I think it's going to be really difficult I think it's difficult to do nothing, but I also think it's difficult to do anything. So I think at the end of the day, they'll probably come up with a smaller bill perhaps. And we'll have to see, as Melinda was talking about, the Senate is still really working through this. At least my estimation is they're probably not going to have a final proposal in the Senate until the end of June at earliest, maybe early July. Then they only have a few weeks to try and start working through that in the Senate before the August recess hits. So we're probably not going to see something until September, I want to say. And that's important because one of the things again here is there's an attempt to get some tax savings from healthcare reform that could be used then on tax reform. So there's some predictions. I don't think this is dead. Some people thought, nope, this is over with. I think that instead we're going to see some activity going forward. I think there's going to be a lot less there than is there right now. There'll be some other things like association health plans or other things that would maybe be an effort to try and drop costs for smaller businesses or to allow them to band together. But it's going to be hard. And the final slide here just says why it's going to be hard. Again, you know, it's hard to get enough votes. If you look at the Freedom Caucus and if you look at what the votes were on the AHCA, if you look at the Senate and you look at the people who said at least on the initial version of the AHCA there were no votes, we'd already be at basically not having enough Republican senators. So that's the quick overview and hopefully a helpful update for you on where we're at and a prediction. Any questions or anything before we wrap up?
Yeah.
Two-part and mostly opinion, please. Do you see any movement in Part A requiring Congress to have their health care under what they're dictating to the American people? And number two, being able to purchase planes across state lines?
So the two questions are, do you see any change in sort of how Congress would get its health coverage? And then number two, do you see a change in buying coverage across state lines? So number one, that first part question, actually there was a little bit of a scandal when Congress was going to continue to get some favorable treatment. It had a special exemption in one version of the AHCA, and that was then dropped out. I think that that will go under a lot of scrutiny, whatever's in there. I don't know that there will be, if nothing changes, you don't need to put anything in the bill, and so it won't get any scrutiny. And so that at the end of the day, that's my guess. And number two, the insurance across state lines, there is a proposal in the House already that's passed or worked on through some committees. I would think that that's a possibility. I don't know that the Democrats in the Senate wouldn't maybe try and filibuster that, but on the other hand, they might not, just depending on things. You could maybe see that get through as legislation.
So thank you, guys. That was a fabulous presentation. I know that Tim and Melinda will be here for a little bit afterwards, but we're now going to take a 15-minute break, and we'll be back to talk about cybersecurity.
Thank you.